Hi, welcome to today's video and thanks for tuning in. Today we're going to be talking about how to maximize your CPP benefit. This is part 2 of a series of videos that I'm making on maximizing your CPP benefit. If you didn't see the first video, have a look right here and you'll see it. Now, today I'm going to be sharing with you 2 compelling reasons as to why you'd want to defer taking your CPP benefit. I'm going to show you the 3 reasons or 3 adjustments that the government does to Canada Pension to increase your benefit to you in retirement. And I'm going to share with you an actual example of someone taking it early at age 60 and comparing that with someone who defers their Canada Pension Plan. I'm going to do all of that in, let's say 8 minutes, okay? So I think you can stick with me for that amount of time. Now, in the first video, I talked about increasing your CPP benefit by 125%, even 200%. But today, these are compelling reasons why you should take your CPP benefit. I hope you enjoy it. If you're new to this channel, my name is David. I'm an active advisor working with clients right across Canada, individuals, business owners, and families. And I also make videos around retirement planning topics like how to use insurance, how to take money from your company if you're a business owner without paying income tax, how to protect and grow your investments, RSPs, tax-free savings accounts, the whole umbrella of financial planning. So if you haven't subscribed already, hit that red button and we'll see you in the next video. Let's talk about today's subject. Canada Pension Plan benefit, if you contribute to the maximum over a 40-year period, the monthly benefit is $1,253. Now, the average, though, is only $727 per month. That's a significant difference in the maximum versus average. So the first thing about Canada Pension Plan, and by the way, I've got a whole video library here on Canada Pension Plan if you want to have a look at that. But the whole message here is make sure you contact CPP. You can Google it. I'll put the link in the description below. But essentially, you want to know what your number is, right? If you're planning for $1,200 and you're only getting $700, it's a big difference in your monthly benefit. Now, here's the first compelling reason why you would want to defer your Canada Pension Plan. Well, we're living longer. If you're a couple today, age 65, and you're healthy, you have an 89% chance of living to age 85, a 72% chance of living to age 90, and a 44% chance of living to age 95. So in your planning for retirement, you probably didn't consider that you were going to be living this old. We look at our parents and we think, and our grandparents, and we say, well, they died at certain ages. And you think, well, I will too. But we're just doing better at being healthier, medical advances, and we're living much longer. So you might need to rethink how old you're going to be in retirement, how much money you're going to need throughout your retirement. We talk about this discount, 36% discount for taking CPP at age 60, a significant permanent reduction in your Canada Pension Plan versus someone who takes CPP and defers it. 8.4% per year goes up to 42% at age 70. That's a massive difference. Now, a lot of people can't, they'll say, okay, that's a big difference, but what is the actual dollar amount? I'm going to get into that, but first I'm going to share with you the 3 adjustments. How does the government adjust your CPP? The first one is an annual inflation. They're adjusting on January 1st. They're adjusting up. They never adjust your CPP down, but they're adjusting up your benefit by inflation. Now, it's not exactly the same. You know, the difference between 2021 last year was an adjustment of 3.4% for CPI. That's your inflation number. But they only adjusted CPP by 2.7%. So it's not exactly the same, but 2.7% is a significant adjustment. The other way is through YMPE. This is years maximum pensionable earnings. Essentially, I'm not going to get into the math, so you can good, he's not going to do math with me. This is the cap of income that the government taxes you on. So right now the cap is $64,900 that is eligible to be taxed for CPP. So from $3,500 of income to a maximum of $64,900, that's in 2022, that is the eligible income that the government uses to tax you for your CPP contributions. And every year they increase that by about $3,000. So that means year over year, there's more money that is eligible to be taxed for Canada Pension Plan. And the third one is the wage growth. This is about trying to catch up with how much inflation we've had over the years, how much money people are making, this divergence between the cost of goods going up and actually how much money people are making. And what the government originally, when they created CPP, was to replace 25% of your annual income. Now they wanted to replace a third of your annual income. And to do that, they have to make these adjustments each year to have more money being contributed to your Canada pension plan so that they can pay you a third instead of 25%. And those adjustments are going to be phased in until year 2025. And why are these important? Well, look at this slide. There are years where inflation is above the indexing, and there are years where indexing is above inflation. They pretty much catch up to one another at some point, but one of them is usually lagging behind. Look at 2016, 17, and 18, where indexing lagged behind inflation. Eventually caught up and inflation dropped. Indexing was above inflation. That was good for everybody. But now we have 2021, 2022, where inflation is way, way much higher than indexing, and the government is in that cycle of trying to catch up. So if you're going to be retiring shortly, you really should be considering on deferring, because you're going to be benefiting from having a much larger amount of CPP available because of this. Indexing is going to be fairly aggressive. I think let's say above 2.5%, maybe even 3% in the next 2 to 3 years, each year going up. We talk about age 60 and taking it early. Well, here's the math. Let's compare monthly benefit side by side. If you're taking it at age 60, you get $750. If you add in those 3 adjustments, that's what that red column is. The monthly amount is going up each year. Now, if you look at taking it deferring, for example, this is where just 1 year difference of 12.76%. You're getting, just deferring from age 60 to 61, you get an increase of 12.76%. People are thinking, well, no, all I got was the 2.7. No, because of the 3 adjustments, it works out to 12.76%. Think about just investing in return. That's a significant return. I like it. So look at age 67. If you're 67 years of age, comparing to that somebody who took it at age 60, it's 125% difference. If you're taking it at age 70, that's a 200% difference than that of somebody who took it at age 60. If you work all the way through with the inflation adjustments and the 3 adjustments we talked about, at age 70, if someone took it at age 60, they'd have $914 a month versus somebody who's got almost, we'll call it $2,254 per month. That's a big difference between the 2 numbers, right? And that's because you just simply deferred taking your CPP. And it begins by examining your financial plan, having a conversation with your advisor. Do we need to take CPP early? I know there's videos around people saying, well, let's start winding down our RSPs ahead of time to mitigate clawback on old age security and dying with too much money and having too much money going to taxation. All of those are really important discussion points, but you're also giving up increases the government is just going to give you for deferring your CPP. It's just extra money. It's a bonus there for you. So why not plan for it in advance? So talk to your advisor and figure that out. I always like to end each video by saying that we take care of your wealth management so you can take care of what's most important to you. There's my contact information. I'm so happy you stuck around to the end of the video. If you have any questions, please put your comments below. I want to hear from you. Your comments help me to understand that, one, you get the information. And if there's something that you wanted me to talk about, a lot of people, I want to say thank you. A lot of you have been putting comments about saying, could you make a video on this subject? So thank you so much for giving me your video suggestions. And I look forward to seeing you in the next video. Hope you're doing well. Thanks very much and take care.